Wednesday's market closes mixed in both grain and livestock futures. Joining us with analyst Dwayne Bussey with Bolt Marketing. Let's talk about the grain trade first. Corn and soybeans setting back. In fact, soybeans kind of led the charge down here along with soybean oil. So, are we continuing to consolidate, or was there anything else that pushed the market down?
A little bit of everything. I think, first of all, we got this possible railroad strike happening later this week. And, that news kind of surprised me. I just heard about it over the weekend, and you're getting more articles. In fact, earlier in the day on Wednesday, you heard this, that, one union has already decided to strike if they don't reach that agreement Thursday night at like midnight or something. So that's obviously very negative. There's also a little bit of negative China talk out there. The Biden administration is saying that they might consider putting sanctions on China if they put pressure on Taiwan, so that's negative too. But all this makes kind of sense. That's a lot of negative news, but we've rallied a lot in soybeans here in the last week. So to pull back 20 to 30 cents shouldn't be a shocker to any of us, I guess.
Yeah, I was going to say we put in 2.5-month highs there on Monday. So, this time of year, it is hard to get the market to rally seasonally too, isn't it?
It is, you're right. And think about these numbers that we're talking about. We're talking about $7 corn and $15 beans that we kind of hit our ceiling up against and couldn't punch through. Well, the supply side of the situation and that USDA report that we just had screams bullishness and we need to ration demand. But this time of year during harvest, as we go into harvest, we won't have to ration demand. We'll have plenty of supplies of corn and beans on hand for the next several months. So it's kind of an odd time to just go flying higher in ration demand. And these big questions of how much have we rationed demand yet or not are out there. So very interesting time, but yeah, very hard to just go flying higher. I'm a bull, but I understand a pullback going into harvest as well.
So you bring up rationing demand. I have to ask you, we did have the ethanol production report out. We were down I think 29,000 barrels per day. We've continued to see ethanol prices start to move above RBOB. So are we seeing margins kind of tighten here for those ethanol plants, and maybe they're backing off?
I think they are backing off a little bit, but I talk about harvest, but harvest hasn't really begun yet. So it would make sense that their margins would be a little bit negative right now because it's still hard to find that old crop corn out there. And if they are finding it, they have to pay dearly for it. So yeah, that and gasoline demand has slipped the last several weeks. We're back up finally this week. So no, I think their margins are a little bit more negative. So yeah, the crush number today didn't equal what we need for this new crop season for ethanol demand each week, but I'm not too worried about it yet, Michelle. It's a time of year it doesn't surprise me.
So what is your marketing advice on the impending harvest? Do you sell off the combine or store?
Oh man, is that a great question? It really depends on the client. I'm sorry, that's a cop out. Now I'm bullish, so I will at least say that. I mean, I think prices.
You're a farmer.
Go high. Yeah, right. We're always bullish. Yeah, you kind of caught me there. But I will say this about price. I don't know how high they have to go in the short term, but I do know this. They're going to be well supported on dips because of what we just talked about. Very tight U.S. supplies and relatively strong demand. So I just think dips are going to be bought really well. But, to answer your earlier question about, are we running up against some resistance up here at 7 and 15? Absolutely, because it don't have to be that high during harvest. So I mean, if you're going to sell before the end of the year, I think you can just sell right now and be happy. If you want to hold for a better basis, I think you'll see a much better basis in January and February.
Wheat market up today and in fact was up yesterday despite that screaming higher dollar. And so what do you think? Is it just technical buying? Did the funds get caught short here, or is there a weather play going on, or what?
Yes to all of them. I think it's a technical thing. I think, you look at a chart, it looks like it's actually making a pretty nice U-shaped bottom. The funds are caught short, and I don't think they really should be short that market anymore when you consider the Ukraine situation. But the third thing you mentioned is the weather play, and it's very dry in the southern plains. It has been all year long, and we get to this time of year, we think it's so powder dry they're never going to plant, but here's the thing, they're going to plant it anyway. Now, yes, they'll need rain to get it to germ and come, but that'll be a weather premium we'll probably build in this market till the end of the year. So yes to all of the above.
And the cattle market, a little setback here today, but honestly, live cattle futures have been really resilient during all of these recessionary fears. How long do you think that market can shake that negativity off?
I'm hoping long enough till we can get to the point where slaughter is starting to be reduced, and we see this reduction in supply that I've been promising for like a year. And I'm not the only one. I think most people in the cattle market keep saying that we're going to see lower numbers soon, but we have not seen it the last 3 weeks. In fact, slaughter's been up, cutouts are inching lower. But you're right, the futures market is not crashing. We're still looking at 150 for fairly close, December fats, and back months made new highs here recently. So I'm impressed with the futures trade action, I guess I should say. So I think if we can just hold on here for a couple more weeks, eventually we start seeing the slaughter number dip back into this winter, and then we could really actually make another leg higher in that market.
Yeah, and those tight supplies are being anticipated with the premium structure and the deferreds really bumping up there. The cash market, though, right now has been a little sloppy, and so is that going to firm up here pretty soon?
September normally isn't a very good month for cash cattle trade. So I'm not going to say that, next week will be $3 or $4 higher. I'm just kind of hoping it just maintains itself. It can go sideways for a while until we can see those lower numbers. But I just get this feeling when I look at the feeder cattle market, especially the cash feeders, that there's such strong demand out there. And I got a feeling that it's a lot of packers buying them. And if the packers are buying them, I think they know something I don't know, that it's going to be a bullish market in 23. So we probably won't go flying higher anytime soon, but I think we'll be higher in a couple months.
So hogs had a big update yesterday, back down today. Is that market trying to bottom? We've got the cash index almost now in line with the October.
Yeah, October's getting in line a little bit, but the December's still at a very large discount to the cash, and for a seasonal this time of year anyway. So that's why I think we saw a nice uptick the other day, and cutouts did bounce for a little bit, but overall, it's still a tough market, maybe sideways at best. China is going to release some pork reserves out there, so maybe there's a little bit of bullishness there that someday they'll need some more demand.
Appreciate your time. That is Dwayne Bussey with Bull Marketing.